Hello everyone, welcome to my channel, and today I'm going to be highlighting 3 stocks that I'm buying right now. So I'll go through who they are and how they make money, how they've financially performed recently, and then any risks or challenges that they might have and future outlook. But I also want to hear what stocks you've been buying in June and possibly a quick summary of why, because I like to look into every opportunity really. But if you like videos like this, please subscribe for more investing content and leave a like. But let's jump straight in the video. Before we begin, please remember that this is not financial advice and this video is for information and entertainment purposes only. I am just sharing my investment journey in the hopes that people learn things, pick up things, or just get entertainment out of it. So please do your own research when investing into stocks, because your capital is at risk and returns are not guaranteed. The first stock I want to talk about is Gamma Communications, who are a data and voice communications company. But I just want to point out that this was highlighted to me by a fellow investor called Jay. I'll link his video right now. And I've had further chats with him because we're in a community together and we talk quite frequently. And then I went and did my own research, and I was just as certain that it's a good investment as Jay. But how do Gamma make their money? So it's through business to business sales via resellers for hardware, services and cloud centers, targeting SMEs. And then they also do business to business tailored communication solutions. They have been expanding into the European market through acquisitions, most notably Germany, but I believe they also have a Spanish division, and then also just cloud-based services. So I also want to jump into the senior team, because the senior team is one thing I look at, and I was impressed by the senior team. So the CEO is a bloke called Andrew, and he's been with the company since 2007. So he was first the chief financial officer, and then he got made the CEO in 2022. So he'll know the business inside out. And then the other one that impressed me was the chief technology officer, which is Colin. So he came from Openreach, where he designed and built the IT and network for the UK's largest fibre rollout, and he also worked at BT previously. I also know someone personally that has worked at him through BT, and he gave a good reference to the guy. So not only was his experience impressive, I also know someone who has worked with him, and the reference was good. So that just reaffirmed my thinking. So yeah, that's one thing that I'll always look at is in the senior team, and I was impressed. But if we go back to the stock, I have bought £50 worth, just drip feeding it in, and recently they've been down over the last year 20%, but I think there's a lot of upside to come, especially with the expansion into Germany. So yeah, let's look into the financials. So as you can see, most of the financial metrics have been healthy. So revenue has grown 11% year over year, but over the last 5 years it's up 76%. Operating income is up 9%, but over the last 5 years it's up 95%. Earnings per share is up 31% year over year, but over the last five years it's up 100%, so that's quite impressive. Operating cash flow and free cash flow is down, but that will be due to the acquisition of the German division. But other than that, it has grown on the 5 year by over 3 figures. If we look at the assets versus liabilities, this is key. They need to have more assets than liabilities, so if things do go pear-shaped, they have enough to cover it. But one thing I want to highlight is they have 0 long-term debt, which obviously helps the liabilities here, but a company with no debt is always going to perform better than a company with debt. Not always, but you don't want them to be chasing payments and dealing with interest. So if you have a company that's got no debt, then it's quite healthy. If we look at the margins, as you can see, it is green across the board. So what I like to look at is first gross margin. So it's sitting around 50% gross margin with double figures growth over the last 3, 5 and 10 years. Return on invested capital is at 16.5%. Anything over 10% is a good business. Anything towards 20% is a great business. So that's quite healthy. Return on capital expenditure is also at 22%, so that's a healthy figure to be at. Free cash flow margin is 12.7%, so this is what they turn into free cash to be paid out as dividends or to buy back shares, and that's a healthy margin. If we look at Wall Street's targets over the next 12 months, in the lowest forecast it is up 27%, in the highest forecast it's up 82%. So I've personally put my price target at 1700 pence over the next year, so just below the average forecast, and I'm willing to buy this under 1400 pence. But that's not financial advice, this is just my own personal targets of my research. If we take a look at the dividend, they have a dividend yield of 1.69%, with a dividend growth over the last 5 years of 13% and a payout ratio of 24%. So only using a quarter of their free cash flow to pay the dividends, which is quite healthy. They pay it semi-annually in May and September, and they have a dividend growth streak of 6 years. So in terms of a safe dividend, as you can see here, the dividend safety score is quite high, and it is growing, and it is growing fast. But if you look at total shareholder yield, so even though the dividend is only 1.665 or 69, total shareholder yield is 3.4% through share buybacks and a little bit of debt pay down. But obviously they don't really have any long-term debt, so that is marvelous. The last thing I'll highlight is the intrinsic value. So in a worst case scenario, it's undervalued by 7%. In the base case, it's undervalued by 25%, and then in the best case, it's undervalued by 51%. I think once the Germany starts taking off and they start doing their own thing in Europe, this will take off quite a bit, and there's a lot of growth to be had. So if they can certainly use up that growth, it'll be a great investment. But I think from what I've looked at, it's a healthy business fundamentally. It has a strong leadership team, and it seems to have a good growth plan. This is why I am invested in Gamma. But yeah, let me know your thoughts below, and don't forget to check out Jay's video. The next stock that I am buying this month is Marks and Spencer's. So if you watched my video last month, these were also on there. I've got quite a strong conviction around Marks and Spencer's. I currently hold 16 shares, and I want to top this up further. Over the last month, it's stagnated really, which is fine for me because I want to buy more shares. Obviously, the biggest threat and news to Marks and Spencer's recently is the cyber attack, and there's now a joint claim being put in against them. So effectively, customers who think they've been affected can go to this firm, and then they'll do the investigation, and it's a no-win, no-fee claim. They also now believe they've lost around £300 million in revenue through that cyber attack. But as of last week, online orders are back up. And in terms of compensation, what's been reported so far is they're going to be able to claim up to £100 million in compensation from the insurance. Obviously, that's less than the 300 million, but we'll just see what happens. The attack itself, if people can start claiming from Marks and Spencer's, it will take a little bit of a hit, but overall for the brand, I don't think it's going to have any long-term negative effect on the brand or the company. There's still a strong reputation, there's still a strong brand in the market, there's still satisfying the customers. Nothing's dropped in terms of quality or anything like that. So yes, what has happened is bad, and it is a risk to continue playing down on it, but we won't know until the next report. But yeah, let's jump into my technical analysis. So we can see that the earnings per share has been growing. It's been growing steadily from 2021. So the 5-year earnings per share growth is 306%. Hopefully that keeps going up. But if we look at the breakdown, you can see revenue has grown, and it has grown 26% over the last 5 years. Operating income has grown 21% over the last 5 years. Net income has grown 934% over the last 5 years. Earnings per share has grown and projected to continue growing, just like the rest of the business. Free cash flow is a bit up and down, but we don't mind that. And then if we look at the percentages, obviously it's a supermarket first, so it is a bit tight, but the key one I want to point out, like I said in the previous one, return on invested capital, I like to look for 10% or more. It's just floating above the 10%, so that's quite good. Operating margin keeps growing, net margin keeps growing, so yeah, it is looking good for Marks and Spencer's. If we look at the Wall Street target, you can see no matter how bad they do over the next 12 months, the forecast to do between a 5% gain and a 41% gain. I think again it'll be between the 25 and 41% unless there's any major issues, which there has been recently, but we'll get onto that. They do pay a dividend. It is a small yield, and we'll see what happens with that, but due to debt pay down, they are returning 5.5% to shareholders every year, which is quite good. Another thing I want to look at is the intrinsic value of Marks and Spencer's. So alpha spread shows you this. So in a worst case scenario, it is a little bit overvalued. That's the worst case. I don't think it'll ever come to that. Base case, 16% undervalued. Best case, 44% undervalued, and I think it sits between these two. I am hoping we can get into the 500s, 600s in the next 12 months. That is my personal target for it, but long term, I think the way it's been turned around, it is becoming quite a strong British name again, and it will keep growing and performing well financially. So what challenges have they had recently? So recently they had a cyber attack, unfortunately. So there was disruption to online operations and concerns about potential fines and profit downgrades. What happened was someone's gotten in and gotten people's personal details, but they haven't gotten any passwords or bank account details, so it wasn't too bad. And they believe that they've been facing a profit hit of around £15 million per week from the attack. But it has been announced that they have filed for a £100 million insurance claim to offset the financial damage. If this gets paid, then that's quite good. It's not too much of a concern. But because there was no serious data breach and it wasn't at M&S's fault, it hasn't had much of a reputational damage on M&S. So that's quite good. But going forward, the CEO, Stuart Matchin, he is called, has turned the company around. So they've been innovating the products by collaborating with designers. So that's why the fashion has performed so well in the past few years. They signed a partnership with Ocado, which led to a 19% increase in M&S product sales on the platform. And it is the best financial health the company's been in for 30 years. Normally they say once you hit the best or the highest, the only way it is down. But with this CEO, I have full faith that they'll keep on performing well in the future. And moving on to my last investment for the month, it is my dividend pie. So in this pie, there are 10 stocks specifically that are equally split 10%, and I invest the same into it every month. And I'm doing that purely because I'm happy with the stocks, and it is dollar cost averaging if I just do it every month. Obviously, some have gone up, some have gone down. That's bound to happen. I am building the habit of investing monthly and getting that compound effect. But if we look over the last month, I am in the profit, and June is one of my biggest paying months in terms of dividend. So if we look at I'll show you quickly what companies are in there. I'm not going to go through them individually because I have a separate video on that. But as you can see, Whitestone REIT itself is down 8%, but Novo Nordisk is up 13%. Whitestone REIT I am watching because obviously that's really poor performance, but everything else I'm still happy investing in, and I don't mind. If we go over to Snowball Analytics over the last month, you can see I've outperformed the S&P 500 by 1.8%. Not a lot, but still good. If we look at the actual dividend stats, my yield is 4.2%, and my growth over the last 5 years is 7.5% of dividend growth. So yeah, roughly when I invest my £30 a month, the dividend payout for the annual goes up by around £1, £1.20, which I don't mind. But yeah, as you can see here, June is one of my highest paying months. Before I've invested this month, it was probably the highest, but now I've invested more. I am due to get more over the next 12 months. But yeah, if you look over this year, it is up until this month, it was my highest paying month. So if we take a look, I've got 46 pence coming in this month. I've already received 4 dividends here. I've got 3 to go. But yeah, I'm just building that habit really. And that's one of the things that I would try and suggest to anyone when they start investing, is to just build the habit first. Start off a small amount of money, because you're just learning, and build that habit of paying yourself monthly before doing anything, because that's what I've tried to do. I am constantly looking to review and change the stocks in my dividend pie, or not even change, keep them there, but add new additions. Obviously, there's a bill that might be passed that increases the tax on our dividends by to 30% for US stocks, and 9 out of 10 of these stocks are from the US. So I'm now looking at more European and UK dividend payers. So if you have any suggestions in the comments below, let me know. Obviously, the 2 UK stocks I've bought this month are dividend payers, but they are not what I say they're more growth than dividend. If they mature into a healthy dividend paying business in the future, then that's smashing for me. But right now I say growth. So that has been the 3 stocks that I'm buying this month. Let me know in the comments below your thoughts on the stocks that you're investing in this month, and I'll take a look at them as well. Leave a like if you have enjoyed. Please remember to do your own research if you want to look into these businesses before investing, because what I have said is not financial advice. And I'll catch you in the next one.